Hey traders, Raghee here, and there were a couple questions that I received, and thank you for the emails and the questions in the charts and coffee about the Russell. So while I will consider this leg of the trade done for now, and it was the same leg, see, same idea, 200 exponential, and the zone was a little bit wider here than it was in here. Again, a buy. And then now the market's trading at that 50% mark between the high and the low. Thank you, Darvis. Thank you, Darvis. Okay. And now we're sitting at that level where we take profit. Now, I'm going to give you a little insight into how we take profit in the Sector Secrets Mastery Room and in the Futures Room in the process. So at some point, I would love to see that not only do we just get into this sort of neutral area in the midst of the chop, but we keep going and retest the resistance of the range, because this, of course, is the support. Love to see the market go up and test this area. But we don't know if it can, because there are obstacles along the way. The first obstacle is going to be the point of control, this white line that you see right in there. That point of control is the most volume that we've seen in the Russell futures since, let's see, well, pretty much for the year, right? So that is the most volume that we've seen at that price. Now, when we take a look at the volume, you can see here along the right side, I would say there's another volume ledge right around here that could be an upside resistance level before we get to the resistance that's waiting here. Not that it's a clean shot, but that could be another upside target. Now, I don't know where the markets are going to go, especially in the middle of the range. Our advantage, our edge, is at the upper and lower edge of a distribution chop. So what we do, the process is we scale out of a portion, a percentage of our position. Now, what the amount isn't necessarily as important as the fact that you pay yourself and then you move your stop to break even. Now, if you're trading the Russell futures, that's really easy. You knew the price that you got in at. I might be, say, 0.3 below that. The Russell futures move in tenths. I might be just 0.3 below that level. So I could have a break-even stop that gives my trade plenty of wiggle room and enough room to move for it to maybe keep making higher highs. Again, not presuming we exhaust here again, but not denying that that is possible. Now, let's say you're in the IWM. We have a handful of folks in the Sector Secrets Mastery that while we set up the RTY, they bought calls in the IWM. And let me walk you through what this was. So the IWM, and this would have been back here, this low here, this would have been back on the 19th. These IWM and what we were looking at were the 210 calls. Now, why 210? That's at the money. So the 210 calls cost just under $9. All right, so let's just use $9 as the number just to keep the math really simple. But they cost just under $9 per October 15 210 calls. So I've got plenty of time. I've got plenty of time in case this market was going to hang out here for a little bit and then move higher. I'm not dueling with the theta decay monster. So those cost about $9 each right in here. All right. Now, where we sit today in the IWM at those 210s is about 16. I think it's about 15.5. It might have closed around 15.5. 15.60, and I think we hit around 16 and change. So let's just call it $15.50. Okay, so for every $9 option you bought today, that's worth $15.50. So in this case, per option, that was 6.5 points. All right. So whatever your multiplier is, how many contracts you bought, 6.5 point move. And then this is what I love about ETFs on some of these futures contracts. It's very scalable. Now, $9 is not one of the less expensive options that I buy. It's probably on the pricier side of what we like to do in the Mastery or even the Futures Room. But it's still very affordable. It's $900, yes, But think of it this way. Let's say you have a $2,000 budget. Of that budget, I'm willing to risk $500. So I know my risk. It is absolutely defined. For $2,000 at $900 each, I can buy two. That's gonna cost me $1,800 in margin, well, in capital, because I trade out of a cash account, because most of what I do is long calls, long puts. And so of the $1,800, I can modify the risk a little bit, but you get the gist, right? So for two, this is what I would typically do. Take one off the table and move the stop on the second 210 call to either a trailing stop or a break even. So that way, if it continues higher, you still got half your position on the table. You're at a break even stop, so a winner doesn't turn into a loser, right? Or a trailing, so you can capture and hold some of that profit. And you're still open to the possibility that the Russell can keep moving higher. I mean, it is making a good old college try through that point of control, right? It is a little bit of a candle that suggests a pause, but that's why the first target is here. Now, the question that I get is, can this be shorted? The reason I won't short this, by the way, this is the second time we bought this. The buy is the higher probability side of the trade. And why is that? It's not because I said so. It's because the previous trend was up. All right? The previous trend was up. So this is where the overall oversold buy becomes the preference, because we still have directional bias that is bullish. Just really that simple. Just that simple. So ultimately, what we want to remember is, sure, there might be some fatigue in here, but that's not the trade for me. In fact, the last time that it did it, you can see it chopped around for a very long time. And look how springy this market is off support levels. That's really what I want to take advantage of. Okay, so no on the short. Yes, I hope it does move down lower again, because we'll just fire that trade off one more time, likely with the 210s, and we could probably stick with October. All right, so there's a thorough breakdown. I had a lot of questions about this Russell trade. We've hit the target on this. And so again, this is really just a rinse and repeat of the previous low that we saw on July 19th. Take a look at it on your chart. It'll really start to make some sense when you consider distribution chop, the lower end of your chop, and the directional bias that the uptrend that preceded the chop gives us. All right, I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.